to my YouTube channel Tahir Tech. Today is our topic is insurance fraud. The Insurance Information Institute estimated that fraud account for 10% of the property casualty insurance industry incurred losses and loss adjustment expenses, or about 30 billion a year. This fraud results in higher premiums. Fraud may be committed at different points in the insurance transaction by different parties. Applicant for insurance policyholder, third-party claimants, and professionals who provide service to claimants. Common fraud include padding or inflating actual claims, misrepresenting facts on an insurance application, submitting claims for injuries or damage that never occurred, and staging accident. Prompted by the incident of insurance fraud, 41 states and the District of Columbia have set up fraud bureaus. Some bureaus have limited powers, and some states have more than one bureau to address fraud in different lines of insurance. These agencies have reported increases in referral tips and suspected fraud cases opened, convictions, and court-ordered reinstitution. Insurance fraud can be hard or soft. Hard fraud occurs when someone deliberately fabricates claims or fake an accident. Soft insurance fraud, also known as opportunistic fraud, occurs when people pad legitimate claims, for example, or in case of business owner list fewer employees or misrepresent the work they do, pay lower workers' compensation premiums. People who commit insurance fraud range from organized criminals who steal large sums through fraudulent business activities and insurance claims, mills to professionals and technicians who inflate the cost of service or charge for service not returned, to ordinary people who want to cover their deductible or view filing a claim as an opportunity to make a little money. Some lines of insurance are more vulnerable to fraud than others. Healthcare workers' compensation and auto insurance are believed to be the sector most affected. Insurance fraud received little attention until the 1980s, when the rising price of insurance and the growth in organization fraud spurred efforts to pass stronger anti-fraud laws. Allied with insurers were parties affected by fraud, consumers who pay higher insurance premium to compensate for losses from fraud, direct victims of organized fraud groups, and chiropractors and other medical professionals who are concerned that their reputations will be tarnished. One out of five Americans think it is acceptable to defraud insurance companies under certain conditions. According to the Condition Against Insurance Fraud, the organization released the finding in a 2008 study. The four phases of insurance fraud. It found that the public is consistently more tolerant of specific insurance frauds today than it was 10 years before. In addition, studies by the Insurance Research Council show that significant number of Americans thinks it is all right to inflate their insurance claim to make up for insurance premium they have paid in previous year when they have had a no claim to, or to pad a claim to make up for the deductible they would have to pay. Insurer must preserve the fine line between investigating suspicious claims and harassing legitimate, and the need to comply with the time requirement for paying claim imposed by Fair Claims Practice regulations. All states have unfair claim settlement practice law on their books to ensure that party involved and informed of the progress of investigations and that an investigation settle the claims promptly or within a specified amount of time. Thank you for watching my video. If you like my video, please press the bell icon and subscribe my channel for the future video update.